Perfect. So let me show you some of the mutual funds which we have invested on. Okay, these are all our high risk mutual funds. Okay, so I normally invest in very high mutual. Okay, hold on. Yeah, I normally invest in very high risk mutual funds. Okay, that's my risk category. So I've always been in that zone. Okay, I want you to analyze on this as a practice. Okay, so initially I want you to practice. So I want all of you guys to analyze on this particular six mutual funds. I'll be sending you now. Okay, and then after that, once you analyze on them, right, you will get understanding how to analyze the mutual funds, and then after that, you can, based on your risk level, you can analyze on other mutual funds as well. Okay, so let me show you. Yeah, Shiva, you have a question?
Hi Dinesh.
Shiva, how are you?
Good afternoon. Yeah, I'm doing good. How about you?
Good. Tell me, Shiva.
Yes, sir. So here now we have seen, I mean, like, let's say after some certain period of time, so if the mutual fund is in loss, so at the time, so do we need to shuffle that into another mutual fund, or do we need to hold on to that? When do we take that chance of shifting it to another mutual fund?
Okay, so if it is like, see, small drops happen. Okay, all the time. So when the market is falling and when the mutual fund is falling, don't worry about it.
Okay.
See, when assume that BSE 250, SBI small cap is BSE 250 stocks. From that, 49 stocks has been selected. So when BSE 250 is falling, this particular SBI also will fall, because from that only these 49 stocks are selected. So if BSE is falling, this also falling, don't worry about it. Okay, and because it is going, it has to go in the direction of the, what to say, overall market. That's how it is. Okay, so that is common. If the market is overall, entire market is falling, this also will fall. That is perfectly normal, as that's how mutual fund works. But if the mutual fund, if the benchmark is also increasing, but this mutual fund is falling, then there's a problem. It means that the fund manager has not selected the right companies into the fund. Okay, so ideally, what does we expect? When the mutual fund is falling 20%, when the benchmark is falling 20%, the mutual fund is falling 15%, the mutual fund is doing well. Because benchmark has fallen 20, but the mutual fund has only fallen 15. It means that the fund manager has worked out, did something in order to actually reduce the risk. Okay, and then when the whole benchmark is increasing by 10%, but our mutual fund increasing by 15-20%, perfect. Stay in that. Okay, because it means that he's putting effort. When it is falling, our fall should not be huge. Okay, this is huge, but it should not be huge. When it's increasing, ours should be huge. That's the expectation. When it is reversing, when the benchmark is falling 10%, ours is falling 15%. The benchmark is increasing 15%, but ours is increasing only 10%, like that. Then there's a problem. Okay, when the fund is not performing when compared to the benchmark, then there's a problem. Okay, if you see that happening for 1 to 2 years, then you can actually move.
Exit. Okay.
Yeah, that is the time you can actually move to different mutual fund.